to turn now and focus on the currency markets and what's been happening with the dollar. It's been hitting record lows since we had, in fact, this debt deal pass and all these concerns about a credit downgrade. I want to bring in somebody who knows a lot about the currency markets. He's John Taylor, the founder and CEO of FX Concepts. It's the world's largest currency hedge fund, has $8.5 billion under management. John is joining us from our studios here in New York. And John, I want to get your take. I mean, we know there are a lot of factors driving the selling going on in the dollar, but what do you think is the primary reason why we are seeing this sell-off?
Well, I think the primary reason is that the world is seeing that the U.S. is going into a recession, and they expect the Fed and the Congress to do something to lower rates, make more liquidity in dollars, and that'll make the dollar weaker.
Lower rates. I mean, is there really any way to bring the rates even lower?
Yeah, there is. I mean, it can go from 0.25 lower a little bit, and they can lengthen the amount of time that they promise that rates will remain low, thereby attempting to bring the longer rates down.
Hey, John, it's Dominic here. One of the things I hear a lot of traders talking about is credibility these days, that the U.S. government may not be as credible as it used to be, AAA's aside. That's having an effect on the dollar as well. But how much, we've heard so much talk about the dollar losing its status as a reserve currency. Yeah. Is there really any fear that the dollar is not going to be the world's reserve currency here?
Well, I think some people fear that, or we wouldn't be having this kind of activity. But I hate to say it, but those thoughts are really stupid. I mean, there has to be something to replace the dollar. The only choices in the world today are the euro and the Chinese renminbi. And nobody wants a communist currency to be the lead currency. We would be sort of a communist world. And the euro is having a lot of trouble. There really is absolutely no alternative for the dollar in the next 5 to 10 years. Doesn't matter what its rating is.
John, that being said, though, if you're looking for a currency to put, essentially if you're looking for where to put your money, what to buy and what to sell, I mean, if it's not the dollar because it's losing value day by day, then where is the next safe haven for now?
Yeah, for now, it's been, and I'm not sure that this is going to be the same in the future, but in the last couple of months, last year, it's been Australia, New Zealand, Chile, even South Africa, places with tremendous commodity strength.
But is that where you are putting your assets?
Well, we have, but we're backing off, and we're beginning to like the dollar a little bit.
Oh, you are? Okay.
Yes.
Well, I mean, John, one of the things you talk about these commodity currencies, right? How much better is it to invest in those commodity currencies as opposed to just the commodities themselves? If I want to invest in copper, why do it through Australian dollar when I can just do it through copper futures?
Well, the problem is the copper futures are very illiquid compared to the Australian dollar. You can do 100 times more Australian dollars than you can do copper.
Okay. John, you just, right before Dom was saying that, you said that you are looking at buying the dollar, you are buying the dollar. Right. Is that just on technicals, or what's actually behind that thinking?
Well, I mean, I guess it's technical a little bit, but when everybody hates the dollar, there's nobody left to sell. It's a monumentally large short position, both in the IMM and among banks that are keeping track of these things. And even then, that's just short-term money. Long-term money, everybody's been short the dollars for years. So if the dollar gets squeezed to the upside, and I would argue that the dollar is likely to get squeezed to the upside, maybe not right now, but certainly by Labor Day, by the 1st of September.
Why do you say that? What would happen in the interim?
Well, our more technical things are telling us that we should watch out that the yen and the Swiss are going to be strong all the way up until the end of the month. But actually, when the yen and the Swiss are strong like this, that's bullish for the dollar. It's more negative for the euro. So the other thing that's going to happen maybe is that Europe is going to fall apart again.
Hey, John, so what is the target for the euro then? If the dollar is set for this kind of move higher, what's the euro going to do here? Is it going back up to 150, or is it going down to 125?
It's going down to 125. When the dollar goes up, the euro is going to go down. And even during the rest of the month of August, I would look for the euro to be kind of a neutral thing, something trading between 141 and 144, 145, nothing more.
John, tell me what you make of central bank intervention. I mean, we heard some rumors and reports earlier today that the Bank of Japan came in to try to sell some yen to get that yen lower. Are we going to see more of that going forward?
I think we will from the Japanese, but I don't think we're going to see that from too many other people. It really, when you're talking about the euro or the U.S., one, it's against the philosophy of both of these central banks. And also, those currencies are so big they can't do anything about it, no matter how much money they spend. The Japanese think they can do something about it, but I don't think they will be able to. We're arguing that this time, we do expect them to intervene, but this time it won't work.
Okay. All right, John, thank you very much. Really appreciate it, getting your take on the currency markets.